Welcome to the STARS program, seniors taking active roles in society. And now, here's your host, Anita Finley.
Well, life insurance is a big subject, and you have to have a real expert who knows what he's talking about or she's talking about. And I happen to have that, and that's Rob Colson. And Rob has been in the insurance business for a long, long time. He does a lot of other things. His company is US Insurance Auditors, LLC. So life insurance, what is it about life insurance that people are confused about, that they know they should have it, some do have it, some don't have it, and then some don't keep it? That's a big subject. I know, just take one at a time.
It is a big subject, Anita. It's probably one of the most misunderstood assets or vehicles there is in the financial industry today. It's not as simple to understand as buying Apple or Yahoo or stocks in the stock market that people are familiar with in their day-to-day activities. Life insurance is a valuable hidden asset that most people do not realize the potential value to them above and beyond just simple death benefit values.
How is that?
The life insurance is an asset, really as liquid, saleable, and as important as your stock and bond portfolio. It doesn't fluctuate like your stocks and bonds. It is a fixed asset most times, but it also provides the flexibility and ability to do different things with it. If you have a permanent life insurance policy and you've had it for a few years, you've been paying into it for a few years, those policies will allow you the flexibility to borrow against them, take a loan against them. And you sit there and ask, well, why would I want to do that? You know, I've been paying into this life insurance policy for 8, 9, 10, 15 years. Why would I want to look at doing that possibly? Well, there's many reasons for that, Anita. Most importantly is a lot of people today are continuing to pay on these life insurance policies, unbeknownst to themselves, that most of those policies, especially universal life policies that have been enforced more than 10, 15 years, have built up such an accumulated cash value that the client, the insured, the owner of that policy, hypothetically should not have to pay those premiums anymore. And they don't realize that. So people keep paying into those policies, paying into them year in, year out, and they're building cash values that at the end result, they are really wasting their current money, time value of money, because a lot of those policies are not needed to be funded anymore.
So the insurance company doesn't really tell them that, does it?
No, they're not going to send you out a letter, Anita, and say, you know what, you've been paying for 15 years, just stop paying us now.
They should, though, Rob. I mean, that seems like that. So that's what happens. That's your job.
Well, it is. And that's why we do what we do. We audit people's life insurance. We audit any type of really investment vehicles they have today. But the hidden asset today is permanent life insurance. We look at numerous cases on a weekly basis, and 8 out of 9 times, we can tell people to either not put as much into the policy, don't continue paying that policy, that's a paid-up policy. Regardless, what we're telling the client and customer at the end of the day is, we can put more money in your pocket by either doing exactly what you're currently doing or just telling you to alter a few things on that current policy.
Seems so simple, but, you know, I don't know. Because you understand life insurance, do you understand all other kinds of insurance, fire and everything? I mean, why do they make insurance policies so difficult to understand?
That's a good question. It's you know, it comes back to the insurance company has a lot of things they need to cover as far as incidentals on those policies to make sure that they're covering themselves as well. Remember, they're in the game to protect the insurance company as well as the insured. And at the end of the day, they will never call or send you a premium notice and say, by the way, Anita, don't pay that bill this month. You don't need to.
Oh my! So that's the real world, right? Well, let's figure out what we can do. So people who are sitting at home, and does this only apply to whole life?
No, it doesn't. Actually, not at all. Today, the most popular policies are what's called a universal life policy, and that's really because of the flexibility they provide. The premiums are flexible. If you have an account accumulation value, you can skip monthly payments. You could even skip yearly payments if the accumulation value was higher. Now, again, you're probably sitting there asking yourself, why would I want to do that? Well, if you've already paid into something, regardless of whether it's your mortgage, your car, or what have you, and somebody came to you and you were in your 4th year of your car loan, and the bank called and said, Anita, we wrote you a 5-year loan on that car, but guess what? You're in the fourth year in 1 month. You don't have to pay that anymore because you've accumulated so many dollars in their fund account for that vehicle or that house or that life insurance policy that accumulated value by the growth inside the vehicles that they use on insurance accumulation value accounts offsets what the premium might cost. So in quite layman's terms, as once you've been in a policy for an extended period of time, it has built an accumulated value that is cash you could take, you could withdraw, you can take a loan against it if you wanted to. More importantly, you can quit paying that premium. So what we do as a firm at US Insurance Auditors is we analyze those premiums based on potential maturity. What does that mean? How long is that policy going to be in effect? Most universal life policies go to 100, 110, some to 120 in age of years. And what we can do through gathering illustrations from the insurance company in present time is project those values out exactly today. So let me tell you how this works. If you bought a policy in 1995 and you've been paying into it for the last 20 plus years, that policy has been building cash value of its universal life policy. And what happens is if you continue to pay that premium is going to be in excess of what is actually required to keep your policy in force. So you're actually adding more money to that insurance policy than could be potentially necessary. And the only way you can find that out is analyzing it, gathering illustrations, and what we call verification of coverages. Once we look at that, we can guesstimate what your values are, what the expected premiums going forward to make sure that policy never lapses, goes away. It always stays with you. But we can tell you that you have, extra $20,000, $30,000, $50,000 sitting in this life insurance policy that you could be using in your own pocket. You could be taking it to pay off that little bit extra you have on your home, paying off that last bit on your car, maybe taking a vacation. So those dollars are not going to take away what you just wanted from the beginning, which is a life insurance policy.
So do you have to inform the insurance company that you're not making the payment?
Not at all. Not at all. That's not at all, because on certain types of insurance, especially universal life, that's the beauty of it. It's a flexible product. So the average consumer would have no idea. They get a statement once a year, shows them what their annual costs are going to be. If they're on a monthly bill, it shows them the modal billing amount. But in between that point, they see these values, a death benefit, and then they look at that and they go, yeah, I remember buying that $500,000 policy. I remember that agent in 1995 said it was $2,823 per year, and I've been paying that every year.
And I haven't heard from him once either. That's the other problem.
That is the big problem, because the agents today and prior years really aren't proactive in monitoring that process, because it is within the insurance company's best interest to, A, keep that policy in force, and definitely on that agent's part to keep that policy in force.
Well, this is so shocking to me. I know ever since I met you and you've told me about this, Rob, I can't believe that. So, but the other thing is usually insurance policies are automatically withdrawn, too. So it's not like you have to write the check. So they're going to take it out every month. And so if you do decide not to, you're going to have to cancel that automatic policy payment.
That's exactly correct. And a lot of policies do have that automatic withdrawal feature. And that's, again, why most consumers today are overpaying for their life insurance. Up to 68 to 70% of people are blindly paying that premium monthly without any retrospect as to what they could be saving, really.
Oh, this is for me. So this is what I suggest all of you do. If you're shaking your head as I am, because I am giving Rob my policies to check because I can't believe it. I'd love to have some of that money monthly, not being written out. But anyway, what you want to do is you want to get in touch with Rob, and the phone number is 1-800-218-5033. 1-800-218-5033. And he really is local. He has an office right here in South Florida. But we're going to give you the website, which is usinsuranceauditors.com. usinsuranceauditors.com. And I can just tell you, if you let him review your policy, you will find out that you're probably going to wind up with money that you can spend on cruises or whatever you want to do with it. I really am amazed when you tell me this, that people can, we don't know this. Well, this is what's happened. This is shocking. We don't understand. We think if you have a policy, they expect you to pay just like you have an automobile payment. Everybody pays everything religiously. And that was never explained. And so we don't really know. Let's say the policy that you're insured, life insurance policy that could be $200,000. And you've been paying on that for so many years. And you're telling me there's money sitting in there. Oh, wait, back up because I'm still confused. So if I die, that $200,000 is going to be paid to my beneficiaries. But they're not going to pay extra money, are they? They're just going to pay the $200,000.
Exactly. More times often than not, that's exactly the
Okay,
case.
so now backing up. So if I didn't make any more payments, will I still, my beneficiaries would still get my $200,000?
Absolutely.
Oh, I am just going to faint over this. Rob, this is just seems so wrong, and you should really be helping so many people, telling them this.
We do, Anita, and that's really what the message we're trying to get out today is that take that policy out, look at it, give us a call, let us do the work for you. Our services are no obligation and no fees, and we work with all of the insurance companies in the United States. It's a very simple disclosure from you for us to be access to have those records from the carrier, and then we can make a quick analysis for you and tell you, look, we can do much better. You've already got the best, or coming into a scenario where you might not have to pay into that anymore. We might be able to tell you quit paying that policy completely.
So how do the insurance policies feel about you? I mean, they probably not too happy that you're so smart.
Well, we actually help keep more policies in force today than we're not in the business of canceling people's insurance, and we're not in the business of advising people to do anything that's not 100% good for themselves. And in layman's terms, what does that mean? We will look at exactly where you are in your stage of life. Everybody's scenario is different. If you're a husband and wife and you just had kids, there's a completely different scenario than if you're a 70-year-old, kids out of the house, home paid off, and you still have this insurance policy that you bought 15, 20 years ago to cover the family members, the house, the mortgage, the cars you own. And that asset sitting there today is money you could use for yourself. Give you a real life example. A very nice client we had in yesterday. She's a Lighthouse Point lady, came into the office with some insurance policies and annuities for us to take a look at. And after talking to her through the discovery process, we found out that her 3 kids are very well off. They don't need or want anything from the mother anymore. But she's pinching pennies every month now. She's figuring out how she can pay this bill and that bill, but she has all these hidden assets sitting here that I'm looking at on my desk. So I started asking her the questions and finding out really what's important to this lady. And what was important to her was not having all of this life insurance to bestow upon her 3 wealthy kids when she passes. She's 87 years old. She's pinching pennies every month to pay her bills, electric and everything at her house in Lighthouse Point. But her husband left her very well off with the life insurance and annuities. So we're going to convert on her behalf a couple of her life insurance policies, and we're going to take the cash out of those, what's called a 1035 exchange, which produces no tax consequences to her. And we'll be able to take those dead asset dollars in life insurance she no longer wants and or needs and we can convert that into income for her to offset her arrears every month and her monthly bills at her home. So she left the office very excited. She got the paperwork, and I had a conversation with her this morning after looking at the stuff later last night, and there's no question we can probably create on just her one policy as about $1,700 a month in income for her.
Amazing. This is a great story. This is we should put this into our articles for you, because that's really scenarios that people probably there are a lot of people suffering from the same scenario, aren't they?
You know what? It's amazing to say, but it is. And that exact scenario we discussed earlier is what happened to her. Her husband passed away 10 years ago. She was left with all of this paper, annuities, life insurance. And another thing I want to add in that conversation on her is she has annuities that her husband put into place for both of them over 10 years ago. But that advisor is no longer around. She's now 87 years old and needs money. Well, she had a Transamerica policy, and in one phone call that I told her to call them, she's 87. She should be taking the income that's been built up. She's not 47. She's not 67. She's 87. So lo and behold, she's had this Transamerica annuity that's been very well funded, and all she had to do through all these years in trying to pinch her pennies to pay FP&L and Publix and everywhere else is this, instead of worrying about paying her bills, she's now going to call Transamerica and tell them to start paying the monthly income that, frankly, she should have been taking years ago.
See, she's like a lot of us. If we don't have people like you, an insurance executive that's watching over us, and most of the time, I don't know if they called them orphans, that were, it's like an orphan policy where maybe you had someone and they're no longer with the company, and the company keeps getting the money, but you have no one to talk to. And I guess we must be very stupid, the public, including myself. And we don't call and say, hey, I need to have someone to come and talk to me about this. We don't do that. Why? What is our psychological problem?
There really is quite a disconnect between what the customer got when they bought that policy and down the road. And what I mean by that is the people, when you call insurance companies, and you can imagine the high-rise buildings all over New York City, they employ tens of thousands of people. Well, a lot of those people aren't professional financial planners. They're consumer service representatives. So when you call them up and you ask them, I have this policy that I purchased in 1995. Premiums were $2,823. Do I have to keep paying that policy? They will say, Mrs. Finley, of course you do. That's the annual premium due on your policy. They will never say or have the intuition to, you might want to have somebody grab an illustration and explain to you exactly what you own today. Not what you bought 21 years ago in 95. What do you own today, Mrs. Finley? And a professional planner, what we do is we audit that. We can gather those illustrations for you on your behalf. And we can tell you without a shadow of a doubt how long that policy would go if you never paid it again. If you skipped a year's premiums, you wanted to not pay it this month, you're tight on money. Those are the things that people need to know, because the annual premiums don't need to be paid most times on a lot of those policies.
Well, I explained this to Rob, and and the funny part about this is I found my policy that I'm going to give you, but I can't even find the policy on my husband's with John Hancock. But you gave me a number, which was very nice of you. I didn't follow through yet, but I'm going to do that right away, because every time I write, that's a big check I write every month. This is ridiculous. And I would think that there is, I don't know how long now, maybe I've been doing it for 15 years, because it's the second policy we had. And I don't want to pay that, or at least I want to know what I have, and you'll be able to help us do that.
I would be willing to bet, without even seeing your illustrations right now, with 85% proficiency, that I can guarantee that one of those two policies would never have to be paid for again. And that's just from general knowledge.
Right. And I have the one with Equitable. Yeah, no, I am very, very excited about doing this with you, and I hope all our listeners are going to feel the same way. Let's give Rob 10 policies to review, and then we can have him talk about the 10 policies, not about you, but the 10 policies. So this is how you're going to do it. Call him at 1-800-218-5033, and that will take care of no matter where you are, anywhere in South Florida. That'll reach him. It's 1-800-218-5033. 5033, or go to his website, which is US Insurance Auditors.com. USinsuranceauditors.com. And you will really be, first of all, he's a very, very nice man. And he has and I keep talking about this, I had the pleasure of meeting his mother, who actually is a nurse over there at one of the retirement communities in Boca Raton. And she's been doing this for a long, long time. So now, does she have a policy?
Of course she has a policy.
And you're watching over that one, I'm sure, aren't you?
And thank goodness, my father passed away 5 years ago. When we actually moved over to the United States in 1985 from the Bahamas, I graduated from college, wrote a policy on my father in the early 90s. And, of course, we kept that policy, and that's one of the reasons my mother lives well today.
Because of the policy your father had. Right. Well, but I guess the big part is you can borrow, but people have known that they can borrow on their insurance, I think, but they never do that. Or maybe in the back of their mind they were told that years ago. But I never think in terms, and when I wanted a loan, to go to my insurance policy. Isn't that funny? I want to go to banks, you want to go other places, but not anything that you have. And I don't know why. I mean, this must have been taught to us somehow. Maybe someone said, don't touch the insurance policy, you have to have that. And
well, we like to think that, but most people, especially in the term products, Anita, those products are good products in what they provide on the short term, but they don't provide the long-term security of a permanent policy, so therefore they don't provide the flexibility of the universal life policies, SUL policies, et cetera. So what that means is they're not going to build a cash value. There's nothing to borrow against, and they don't accumulate any money. The permanent life insurance policies, like you and your husband have, those are universal life policies, and they have what's called accumulation growth accounts. Those growth accounts are how insurance companies are so profitable today. And what insurance companies do when you pay that premium, Anita, they reinvest your money. And how do they reinvest money? They reinvest money in fixed assets, safe stuff, U.S. treasuries, government bonds, things of that nature. But because of the quantity and the magnitude of the money they're investing, the intrinsic return on a normal policy is guaranteed at like 2.5% to 3%. But really the internal growth in those policies is about 4.5% and 5%. So the amount of the premium that they're calculating that you might owe yearly on that policy is generally a lot lower than that accumulation value. So given the current context of most people in the economy and the markets today, if you've had a policy over 6, 7, 8 years, there's an accumulated value in that policy. Now, am I telling everybody out there today who has a universal life policy to quit paying their insurance? Absolutely not. That is 100% not what I'm saying. What I am saying is...
Call me.
Yeah, call us. Let us tell you that answer.
Yeah.
And I can show it to you in numbers, and we will give you all the stuff we pull from the carriers. Obviously, it's your information. And I can show you statistically exactly what we're talking about to the dollar, why you don't need to pay that insurance.
And will they allow you to get into my insurance policy information? How do I do that? I just give you permission?
Yes. We get you to sign disclosures that allow us to, it's called a life insurance release form that gives us access to the carriers on your behalf.
Oh, I'm signing that. I just have to find that. Well, I couldn't find the one policy, which is so embarrassing, but I do. Rob was very kind to give me a number that I can call. And, this has been so enlightening. You know, it's funny. I think I'm smart in certain things, but I am very dumb in life, in any kind of insurance. I really am. I mean, you know, we have renter's insurance, so we have all sorts of, we have property insurance, we have car insurance. And, you know, it's funny, even on car insurance, no one had told me I had an accident, and no one told me about, there's a certain kind of insurance that pays up if you have, if you're financing your car. It pays it up for you. Mm-hmm. I forget what that's called, but but I have it now. But no one told me to get that.
Right.
The insurance company didn't tell me to get that.
Yeah, non-stacked motorist coverage.
Mm-hmm.
Yeah, that's what we do, and what I want to make the point known to everybody is, it's just like the article in the Boomer Times this month. life insurance truly is as liquid and saleable as your stocks and bonds. And if you are one of those people who is unlike me, who cannot watch your stocks every day on CNBC, you don't look forward to your Merrill Lynch statement in the mailbox every month. If you're one of those people who the ups and downs of your portfolio don't bother you, then you don't need our services at all. If you're one of those people out there who does care about where your values and your portfolios go, and you do watch your stocks and bonds, and I'm betting that 99% of these listeners today do that, why wouldn't you do the same with your life insurance?
Because it just has a different connotation, when it was purchased. Okay, well, I do remember years ago, I didn't do this, but people always said that the man came around to collect on the life insurance every week. Someone came to your house for that payment. I mean, is that something in the history of life insurance?
Oh, it sure is. That's how whole life insurance basically was originated. They used to come and clip the coupon just like they did a coupon bond, give you your monthly clip, just like the Sun Sentinel or the Boca News used to be delivered in the 80s to our homes. The paperman would come, give you your little receipt, and you'd write the paperman his $8.22 check for the month. That's how life insurance was. So the agents used to go door to door and collect those premiums.
No kidding. And it wasn't very much if you do it on a weekly basis, so that's how they were able to convince you. And then what happened? How did it get where that guy didn't come anymore?
Unfortunately, it was because of the fraud in America. Because no longer did they want the agents to touch people's premiums, be the carrier bearer, be the banker. They didn't want agents being bankers anymore. And that's, with the invention and the automation of electronic transmission, it's a lot safer, quicker, and, we're in the day and age, Anita, where they're trying to eliminate checks completely, and that's basically where we've gone. So
I still don't. Yeah, right. I still write checks.
Yeah.
So do you. But I know it is strange. But okay, so let's just get back to and let's just talk about people listening who may. Oh, well, I think we're going to be running out of time. But this was great. I'm so enthused now that we had this show that I can't wait to get you my policy to see what I'm going to save. I really am. So I'm going to do it, and then I'll report on this next time, just how much money we saved. I'm very excited. So why don't you call and see how much money you can save? It's Rob Colson, and it's US Insurance Auditors.com. Call him at 800-218-5033. He'll go and talk to you anywhere you are in South Florida. Thanks, Rob.
Thanks for having me again, Anita.